The following interview is a production of the Financial Survival Network. For more information, go to kerrylutz.com. 1490 WGCH. This is Kerry Lutz. You're listening to the Financial Survival Network. My next guest, Geoff Turk, is a sound money man through and through. He's actually come up with an alternative to keeping your wealth invested in rapidly depreciating fiat dollars. James is the founder, president, CEO of GoldMoney.com. James, how are you?
Good, Kerry. Nice to be with you.
Hey, great to have you here on the Financial Survival Network. We've wanted to talk to you for a while because a couple of weeks ago I was reading and you were saying that the metals were due for a takeoff in the summer. And I was reading comments, which I don't usually do, because usually when you read comments on internet forums, they're nut jobs and psychos. And they said, you see, Geoff Turk is wrong again. Gold hasn't gone up, silver hasn't gone up. And I read that a week ago, James, or maybe 10 days ago. Look where we are now.
Yeah, 1,600 in gold and silver's back in the 40s. You know, I made a contrary call because normally gold and silver are pretty quiet during the summer months. It's a seasonal pattern that tends to repeat, but it doesn't always work that way. And you know, I keep going back to 1982 when gold price rose 50% in 3 months during the Mexican debt default. And my point has been that this summer is going to be a repeat of 1982. It's not Mexico's going to default this time. It's going to be somebody else. And whether it's Greece, United Kingdom, Belgium, Italy, Spain, United States, Japan, or any one of a dozen other countries, who knows? But you know, it looks like it's going to be a good couple of months here for the metals as people worry about the default and move into the safety and security of gold and silver.
Yeah, these are, as the Chinese say, these are definitely interesting times. I know that's an overused cliche, but the world economy, even China, really looks like it was just a bunch of air. I mean, I'm watching these Chinese companies that are listed on the American New York Stock Exchange blow up. And, we had $1 billion. Not really. That's just what the banks said we had. We really didn't have anything. And now, like you said, any one of a dozen hotspots on the globe could blow up. Hungary. My personal trainer's from Hungary, and she's telling me that her mother's car loan is in Swiss francs, and the franc has appreciated so much against whatever the Hungarian currency is that she can't afford to pay her car anymore. I mean, this is a global phenomenon, isn't it?
Yeah, there's a lot of that over in Europe. But you know, you're making a very good point. You know, from a bigger picture point of view, there are two asset types: financial assets and tangible assets. And what's happening as you go through a bust, financial assets lose value. They come to be doubted, promises are broken, and people move to tangible assets of all sorts. And the most liquid of tangible assets, of course, is gold and silver. So it's not too surprising that we see, you know, gold at a new record high this morning, and silver approaching back that January 1980 all-time record high. I expect new highs in the precious metals, as we go forward, because this bust that we're in still has a few more years before it plays itself out.
Well, I just looked at my Kitco.com screen. We're up 1160 in gold. It's at 1606. I mean, I knew this was going to happen. I mean, I bought my first gold in 1999 for $282 an ounce, and not because I'm so smart, because everyone said, why would you put your money in that? There's a great .com you could own. And here we are 12 years later, and my gold's worth 6 times what I paid for it, and their .com became a .bomb. So your point about financial assets, paper-backed assets that aren't worth the paper they're printed on, is certainly one that's well taken.
Yeah, there's another point, too, from your little example. It's that, assets can be overvalued or undervalued. And even though the price of gold has risen as much as it has over the past 10, 11 years, it's still undervalued. And the reason why it still remains undervalued is that the dollar is being debased and depreciated. Its purchasing power is being inflated away. And the consequence is that even though the gold price is going up, it's not going up by the same rate at which the dollar is being debased. So gold is, at the bottom line, and this is the important thing, gold still remains undervalued. And when it comes to managing your portfolio, you want to accumulate undervalued assets and get rid of overvalued ones. Right now gold is undervalued, so it still should be accumulated. At some point in time in the future, you'll want to spend the gold that you're saving now and make new investments. But that's still way down the road.
Yeah, well, I feel like for me personally, I don't have the temperament to be a trader, so I really have to follow the trend because that's the only thing that the trend is your friend in the long run if you can identify it. Here, it's rather unmistakable. But I want to get back to what the governments are doing. This concept of just blowing out the currency, running the digital presses 24/7. I mean, I know that's a bad analogy because all helicopter Ben Bernanke has to do is add a zero, and your currency's worth 10% of what it was a nanosecond ago. But inflation is so old. I mean, it goes back. You see examples in the Bible where they talk about money failing. Rome, China with Marco Polo, they had what they called it flying money. Originally, Marco Polo, when he went there, he thought paper money was such a brilliant invention. And then he learned about inflation, and they called it flying money because no sooner did you get it in your hands than it flew out. And then we go to the French Revolution, 1790, that hyperinflation, and then we had 30 of them in the last century. When is man going to learn? I mean, this is the most frustrating thing to me. There's no free lunch. You can't just create all this currency and expect nothing to happen. When will we ever learn, James?
Well, give it a couple thousand years of monetary history, I'm not sure we ever will learn. Or put it this way, some people will learn, and they'll take those steps to protect themselves from government action that debases and ultimately destroys the currency. I mean, we've had like 100 currency collapses since the end of the Second World War. And, people tend to think it's never going to happen to them. But, even in the United States, the currency has collapsed. The first currency of this country was the Continental. It collapsed, and one of the reasons why the framers created a more perfect union was to create a sound money, a single currency for the nation, and a common market. And, so it was for 180 years until we bend in the wisdom of the framers in 1971. Now we're facing the same, by going off the gold standard, now we're facing the same problems that the framers faced with the Continental. And, the conclusion of my book, The Collapse of the Dollar, that came out in 2004, is that the dollar's on this path to the fiat currency graveyard. And if we don't get off of it, it's going to collapse just like the Continental. And ever since, we've still been on the same path, and we can see the dollar, heading over the edge of the cliff.
Yeah, I love that old saying because, in the U.S. they don't teach history anymore, but not worth a Continental. That was about the worst insult that you could throw at something or someone. You're not even worth a Continental because a Continental was worth like a Reichsmark or whatever the Roman currency was. It had zero value, and we've just forgotten about that. And that old thing of those who forget history are condemned to repeat it. Well, we're right in the midst of the biggest repetition of history in history, and it's not going to have any better results. So, like you said, precious metals, I think certain commodities and food, those are all going to skyrocket. And to me, James, it's like when I buy gold, it's like I'm seeing tomorrow's newspaper today, because I know what tomorrow's newspaper is going to say. And next month's and next year's, there's no mystery about this thing. And yet, the way they're treating it, it's like there's a mystery. It might not happen. Unless we change our evil ways, it's going to happen.
Yeah, there is no mystery to it. And, one of the things that I've been recommending, all decade long, is, accept the fact that gold and silver are money and treat them as money. Don't consider them to be an investment. In other words, compare them to the dollar, compare them to the Swiss franc, compare them to the British pound, compare gold and silver to other forms of money. And, what you should be doing with your gold and silver is just dollar cost averaging. Every month or every other month or whenever it fits your household budget. Just continue to buy and accumulate some more gold and silver and view those gold and silver to be your savings. When you have money, you can do two things with it. You can save it or you can spend it. Right now, what you want to be doing is saving your gold and silver, continuing to accumulate it, and at some point in time in the future, probably within 3 years or so, gold will become overvalued, and you'll be happy that you've been doing all of the saving and accumulation of wealth because you're preserving and protecting your purchasing power.